Hello and welcome to CMC Markets Weekly Trading Outlook for September 28th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is what Fed speculation and big data could mean for US dollar, CAD, gold, and stocks. And I'll also cover a number of indices and some other major currencies as well. It's another huge week for news. We're coming off a roller coaster week for markets where we saw a real change in how the markets react to news. For the last several years, we had seen where anytime something dovish came out, markets would go, hooray, this means more liquidity from the Fed or more liquidity from other central banks, and drive stock markets higher. Over the last year or so, as the Fed has quietly taken away stimulus and hinted towards a return to normalization of interest rates, we've seen stock markets level off, and we've seen markets price in an initial rate hike, and people starting to wait for it. The Fed's failure to raise interest rates earlier in September actually brought about a negative response because it had people starting to think, well, gee, if they haven't raised rates as had been planned, well, what's wrong with the economy? What's wrong with the outlook for corporate earnings and resources? And we've seen a real battle back and forth over the last week or so with whenever anything dovish came out, stock markets and US dollar would go down. Whenever anything hawkish came out, we'd seen stock markets and US dollar go up. This is a real change for stocks. Stocks have gone away from the bad news is good news scenario back to good news is good news and bad news is bad news for stocks, and that's something that we've seen. It's a big change, and we expect to see that continue into this week's big announcements. We saw late in the week a couple of significant events, and one of which was Fed Chair Yellen came out with a speech where she clarified the Fed position on tracking towards interest rates later this year. It was fairly similar to the speech that Vice Chair Fisher gave at Jackson Hole, and seems to have settled the matters, and some of the things that had become muddy and murky have been clarified a little bit. Now, we're still looking at seeing a number of Fed speakers this week, and that could change. On Monday, we have Evans and Dudley, two regional Fed presidents, speaking. They both have been firmly in the dovish camp. Midweek, we have a whole pile of Fed speakers one day at a conference. We have Yellen, Dudley, Bullard, and Brainerd. Now, they're really talking more about banking and payments and things like that, but you never know if there's a question period. Somebody could ask them a question on interest rates as well. We have Williams speaking this week. There's a whole pile of Fed speakers throughout the week. On top of this, it's a big week for data. It's the end of the month, it's the end of the quarter, and it's the first week of the new month. So what does that mean? We get purchasing managers from the Fed, from around the world, really. We also get U.S. non-farm payrolls. Canada is not this week. Canada is a week later this month, but we still have non-farm payrolls. That'll be another big potential driver of trading, with people fixated on whether the Fed will start raising interest rates in October or December or push it off to next year. One other thing we've seen emerge is that one of the reasons that it was possible the Fed may have held off on interest rates is because of negotiations in Congress over the budget, and then followed by the debt ceiling. The news came out on Friday that U.S. House Speaker Boehner is resigning and leaving Congress, so that leaves the Republicans in a near-term state of flux. He's leaving at the end of October, so that could potentially change the political situation very short-term in the United States, but it could be a cause of a delay in interest rates from October to hikes from October to December. If we do see Congress in a state of flux, we may get a better idea over this week as to who his successor might be and what that might mean for negotiations. So keep an eye out on that as the week progresses, on top of all of the economic and central bank news that we're already seeing out there. We've been working our way through the most difficult time of the year for stocks, but there have been some encouraging signs start to emerge lately, and I wanted to show a couple of charts here. The first one is, interestingly, the Germany 30, the DAX here. A major sell-off from April had accelerated dramatically in August. We're seeing things level off, but look at this now. It looks as though we've come pretty close to completing a double bottom here. Be watching to see, does this continue to stabilize, or do we get another retest of 93.20? Up here is around 93. 2680. This is just short of 9900. This is the 10,000. To really signal an upturn, got to retake 10,000 for the DAX. But look at this also, though. We are seeing a higher low on the RSI, telling me that some of the downward pressure is starting to ease. Second thing, and this is also comes interestingly, we'll note the Germany 30 may remain active on changing sentiment towards the auto sector following the Volkswagen scandal, and does this spread to other companies? I also wanted to show the Hong Kong market briefly, and actually I'm going to show the China H because it's a little bit more clear, which is intriguing here. We've had a big double top, really a triple top here back in April, May, after the big rally, big sell-off. But look at this. We got a low here, a head here, and a low here. This is starting to look like a not a great one, but a head and shoulders bottom forming in Hong Kong. And on top of this, positive divergence emerging in the RSI as opposed to the negative divergence at the peak is also suggesting again that also sentiment and volatility in China markets and in fear of slowdown in China, that looks like it's starting to subside as well. So that is starting to set up for a situation where the Fed could start to raise interest rates depending on what's going on with the political situation in the U.S. The Q2 revised GDP was fantastic, and so was the core PCE inflation, suggesting that on that side systems look to be go for the Fed to lift off interest rates. We'll get some more data this week, though. We get purchasing managers and ADP payrolls and non-farm payrolls. This will give us some more recent data, give us an indication of is the U.S. continuing its upward momentum, or has it gone soft. I'm going to take a look now at U.S. indices, which are in particular here, I'll show the Dow. So we've got here this, we had a bit of a downdraft here in September. The big sell-off was in August, but look at this. Stability and support coming in at a higher low here. This is just above 16,000. Nice bounce up off of it here. Yeah, yes, this uptrend faltered, but we're moving into a sideways channel, 16,000 to 16,835. A midpoint here around 16,500. So, however, it does look like the U.S. market's in an upswing. Again, remember now, hawkish news has been seen as bullish, as positive for stock markets. Dovish news seen as a negative for stock markets. That's a change of the last few years, but we may continue to work through this. I'll also show the S&P here. And here with the S&P, same sort of thing. Look at this. We've got support kicking in at a higher level here, 1900, even 1910. 1975 is this first resistance, but really the big one is 2000. Look at this. Was a bit of a shooting star here on a breakout failure. We'll continue to monitor this, but we could see some more backing filling and all. But overall, this looks like it's base building as well. Moving on now from the U.S., I wanted to move over to the U.S. dollar and currency markets. The U.S. dollar, of course, had a huge rally back in the early part of this year on speculation that the Fed would start to become more hawkish. As far as I'm concerned, I think that the U.S. dollar has been pricing in an initial rate hike since March. I also think that the U.S. dollar has been pricing in a very aggressive U.S. rate hike program of a quarter point every meeting like they did in the last cycle. This time, however, I think it's going to be a lot more cautious. I still think they'll raise rates this year, but I think then afterwards they'll probably go one hike every other meeting, and because of that, where I think the U.S. dollar still looks vulnerable here. And where are we seeing this show up? First of all, in gold. Look at gold. Gold is turning around and looks like it's getting ready to, it's breaking out here of a head and shoulders a base pattern here. So we had an initial base July, August, higher support here into September, rallying up off of this. It's broken, and unlike the first time where it broke this downtrend line and then failed and was pounded right back, look at this. It broke out, retested, exploded to the upside. Look at this here. RSI has been tested and exploding to the upside again. Upward momentum for gold. I think the U.S. dollar can continue to weaken in the coming months, and I think we'll see it show up in gold. I'm just in gold continuing to rally here. And something else I wanted to show on the U.S. Euro U.S. dollar here, which is also showing signs of life lately. but look at this on the euro. The euro had been pounded in with the when the US dollar took off, but look at this. It's been quietly working its way higher. And look at this. Most importantly here, we're getting very close to a golden cross on the moving averages. 50-day getting very close to breaking the 200-day. If we see strength in the US dollar this week, we could get a golden cross. Although personally, I think it may take a little bit longer into early October before we get it. But we're not just seeing a golden cross in the euro against the dollar. We're also seeing potential for a golden cross in the euro against the pound. Look at this. It's not quite as close, but we've got the 50-day moving average turning up. The 200-day, this gap is now closing. We've had RSI here on euro pound break out of a downtrend, so things have been looking up for the euro, which could continue to rebound as the US dollar comes back off as people figure out when they start to figure out when and what course the Fed may take going forward. Let's look at dollar yen here as well. We had the big plunge here, initial in dollar yen, strong U.S. dollar first part of the year, and now we've been consolidating sideways in this. Let's call it a 118.50 to 121.50 kind of channel. We've been picking up within it lately, but this could turn down. Overall, we still got RSI hanging around. I'll bring this up a bit. RSI still hanging around under 50 here, and this has really been unable to break this channel. Looks to me like a pause within an emerging downtrend. We'll see how this shakes out as it continues to trade in more narrow range. 119, 121 breaks this, then you're looking at 121.75, and this moving 50-day average up here closer to 122. I'd now like to shift gears for a few minutes away from U.S. dollar and over to Canadian dollar. It's also a big week for Canada. We have producer price inflation and most importantly the Canadian GDP report, and it could be a big week for trading in Canada. And I'm going to start with CAD U.S. dollar to make a point here. CAD has been in a downtrend for over a year now, following down along with the declines in the oil price. However, look at this. Over the last couple of months, since the beginning of August, we've had a positive divergence. RSI rising while the pair has been falling. And look at this. We had a bear trap dip below 75 cents last week. This dip was the day that the Norges Bank cut rates. Now, why is this important? Because each time this year that the Bank of Canada cut rates, it was preceded by a cut in rates at Norges Bank. Norway and Canada are both big oil exporting countries and have both been impacted pretty heavily by the crash in the oil price. So what happened here? We saw, no surprise, the Canadian dollar broke down to a new low, but what's significant is it came back above the 75 and it's been holding 75, and that's encouraging, and that suggests that maybe this was a washout here where we haven't had this rejection continue down even farther. There's been no follow through to this breakdown is quite significant, and what we're looking at with Canada now is Canada is unlikely to cut rates at its next meeting. The Bank of Canada next meeting is October 21st. It's 2 days after a federal election. All the polling is suggesting that the three main parties are running neck and neck. We could end up with a minority government situation, or what the British call a hung parliament. We have the potential for a coalition government where it's possible the Liberals and the NDP could try and get together and send the Conservatives into opposition. Anything can happen with this. So because of that, and because the results of the election and who takes over as government may not be settled by Wednesday, the Bank of Canada is unlikely to do anything in October. How does that? So where does that mean that its next meeting after that is the 2nd of December? Well, anything could happen between now and December. We've been getting signs, some encouraging signs on employment and other things that the rebalancing of the Canadian economy is starting to happen, where we had the front-ended hammering from the oil price crash, but eventually you do get positive benefit from the lower loonie for other regions such as Ontario and Quebec and the manufacturing heartland and other export sectors and tourism and things like that. So in time you do get benefits, and it's always been a question through the summer is how long will it take for this to sort itself out. So we'll be keeping an eye on CAD US dollar and this big 75-cent round number. Flipping it over, we'll look at dollar CAD as well, which I will show here. Dollar CAD looking like it's topping out. And same thing here. We had a breakout, a bull trap. We had and a failed breakout and a shooting star, where this shot up and it was. But however, the breakout was rejected. Now, so far the RSI is still positive, so we'll see. But if we continue to get signs of topping here, we could be forming a significant top. Is this a bull trap? Is this a double top? This could be a double top with a big single day candle failure at the top of it here. So there's quite in for quite a significant time here for potential trading in dollar CAD. I just wanted to show a couple of other CAD charts here for interest. This is sterling CAD here. Sterling CAD, if we look at this could be a head and shoulders top here. We've got a left shoulder here, we've got a head here, we've got a right shoulder here. We're getting down close to the neckline. Really, let's call it the two level. If it breaks the big 2 round number, then this could be the start of a downtrend. We've already got the RSI breaking, suggesting the start of a potential downtrend in sterling CAD as well. And I'm just going to highlight in Aussie CAD, which is also of interest here. Aussie CAD is an interesting one here because, in fact, this has been trending lower throughout the year. Australia weakening relative to Canada. Reason for that is, of course, the Australian economy tied more closely to China, who's been struggling. Canadian economy tied very closely to the United States, which has been doing fantastic. And if I actually take this out farther, we'll see that previously to this, the Australian economy had actually been outperforming Canada when China was on a roll. But it's been about over a year now that this trend has been in place, where Canada has been and Canadian dollar has been outperforming the Aussie dollars. So, to finish up here, it is a big week for news. Tons of Fed speakers, tons of data, tons of big data. The focus of this week still likely be on the Fed, and will they raise interest rates at the end of October or not? There's what the data tells us, there's what the Fed tells us, and there's the political situation in the U.S. Do they get their budget and debt ceiling negotiations sorted out, or is there still the possibility of a government shutdown overhanging the market? So there's a lot going on. Looks like potential to be another great week for trading.